All right, guys, welcome back to another episode of the Do Your Own Research podcast. I'm your host, Tom Bonacountry, and if you can't tell, I am super excited today. I am joined by the one and only Mr. Preston Pysh, the host of the We Study Billionaires, the Investors podcast. Sir, how are you?
Great to be here, Tom. Thanks for the invite.
I am honored to have you on the show today. I've been a huge fan of yours. I've been listening to the podcast ever since it came out back in 2014. So I started out, my background is I have an accounting background. I graduated school in 2014 and I started at Ernst & Young. So I'm commuting to New York City every single day. And I'm like, man, this really is a rat race. And I was like, I need to figure out a way to make some money instead of just working for it. So what do? All right, let's go in investing. Who's the best investor of all time? Mr. Warren Buffett. So I start Googling, and then all of a sudden I come across this website, Buffett's Books. I was like, oh, wow, that's crazy. So then
you are early.
Yeah. So I started following you back then, and then I started listening to the podcast on my commutes into New York City. So I mean, you've been very influential to me. I have my copies here of The Intelligent Investor and Security Analysis. So you've been very instrumental, and I just want to say thank you for coming on the show today, but all of the education that you put out for free and really helping people to just get a good financial understanding of like what goes on in the markets and how to think about investing. You and Stig really do an amazing job.
Hey, I'm deeply humbled, and I'll tell you, I had no idea of any of that whenever you reached out to come on. So I'm very humbled and really appreciate it.
Yeah, so when you guys first started, I actually reached out to Stig and I left you guys like a review on everything. And I have the copy of your book, Warren Buffett's Accounting Principles, on my Kindle. So I still go back to that and reference it every now and then. So yeah. I'm very familiar with who you are and your background and everything, but for my audience, can you just give them a quick introduction as far as who you are and, how you play in the financial space?
So it's funny how you said that you were wanting to learn about investing. So you turned to the greatest investor of all time, Mr. Buffett. And I'll tell you, my start was the exact same thing. It was, hey, I want to learn about this stuff. So who's the best? Let me study who they are. And then that kind of led to, all right, well, I've been studying this Buffett style of investing for a long time. How about some of these other guys that are super successful in the markets, and let me study them and how they're different than Buffett. And like a perfect example of a person that was just so much different than Buffett's style of investing was Stan Druckenmiller, who was the guy that basically got his start out of Soros, working with George Soros. And the style and the way that he invests is just drastically different, but he's extremely successful at that style of investing. And so it was really quite fascinating for me to kind of dig into all these different people through the years and study their approach and what makes them different. Well, how are they looking at the world? And then what's the common thread amongst all of them? And through all that experience, I created YouTube videos first. That was one of the first things I did, was teaching people about value investing and kind of this Buffett style approach. And then through the podcast that we've done through the years, it was really kind of studying all these other people and their approach and how they think and just everything.
So let me ask you, how did you go from a value investor into, looking maybe into like growth investing and some of the different areas into speculating in magic internet money with Bitcoin?
I think the word speculation for me has a really bad connotation to it. Based on my background in value investing, you study Ben Graham, and I mean, he uses the word speculation like it's a curse word. So I don't look at Bitcoin as being all that speculative, to be quite honest with you. I actually look at it as being somewhat straightforward, simply because I look at it as a mathematical protocol that's executing fiat currency. And I think that when you look at, and this gets into macro pretty heavy really fast, but whenever I look at the macro environment around the world and I look at all the issues that central bankers have created through decades long of inflationary monetary policy and the implications that it has for the global economy, that is the driver of why I think Bitcoin's going to perform so well in this protocol-based, decentralized monetary policy that's competing with it. So I guess I would push back on the word speculative at this point, especially at this point in the 4-year cycle that we're about to experience. I see it as somewhat straightforward.
So how did you first run down into the rabbit hole?
I started going down the rabbit hole back in 2015. I read a book called The Age of Cryptocurrency back then. It was written by, I can't remember the author's name. He works for the Wall Street Journal, but that book came out, I want to say early 2015. And I was very curious about new forms of money, something that could potentially alleviate all the consternation I suspected we were about to have in the global economy due to excess use of inflationary monetary policy. I've had that concern for a very long period of time. Really, I mean, it goes back to 2008. Like, I never felt like having been in the market through the 2008, 2009 crisis, when we came out of that, I never felt like that was ever resolved. I felt like they were putting Band-Aids on that ever since 2008, 2009. So I stepped into this bull run, this 12-year bull run, or 11.5-year bull run that we're currently experiencing, with the mindset that it was always manipulated and always self-induced based on what happened in 2008. So I was always looking for, okay, well, what is the solution? What's a potential solution to this? Like, how could this potentially resolve itself? And then I heard about Bitcoin back in 2015, just through the news, and it had the big run up to like 1,000, and then it collapsed back down into the $200 range. And that was when I first bought. I read that book. I did a little bit more research, and I was like, hey, you know what? Like, what the heck? I'm just going to take a small position. And I remember buying my first position at $220. And within, I mean, I can't remember the time frame, but it felt like 2 weeks. The price was already at 300, and I was like, what the heck is this? Right? It was this immediate, whoa, this is crazy, this is nuts kind of moment. And so then I just started reading as much as I could. And back then, you know, in 2015, I didn't feel like we were about to have a meltdown like we had in 2008, 2009. And so it was never a driving force for me that it needed to be a substantial position or something that needed to be talked about very heavily, simply because there was a lot of stability in a lot of the various markets, in the bond market and things like that, that the Fed was easily controlling. I would argue today you don't have that at all. And so that's probably why I'm talking about it so much, at least on social media, I'm talking about it so much.
Yeah, and I agree with you 100%. I mean, I kept a lot of money on the sidelines right after I graduated from college because I felt like there was just a bunch of Band-Aids that were being put on the entire financial market. So I came in a little bit later than you. I first heard about Bitcoin back in 2013. I don't think the information was as good back then, and I wasn't very techie. So a lot of it just went straight over my head. But then when I reheard about it back in towards the end of 2016, I was like, whoa, this answered like a lot of the questions, like a lot of the concerns that I had with the monetary system. So that's when I kind of started, doing more research on it, getting interested in the tech, and then really going all into the space. So it's been cool for me just seeing how everything's grown. But I mean, for you to get in at 2015, see Bitcoin's price back at like 220 or whatever it was that you bought, and now going to the all-time high of 20,000, and now it's playing a pivotal role. I really feel like everything is shaping up with the economy, that it's just playing right into Bitcoin's hand at this point.
And I totally agree with you. I think what might be hard for people that are just coming into it now, they just don't necessarily understand all the ups and downs that occurred throughout that period of time. I mean, there was a lot of, I mean, I'll go to 2017. In the summer of 2017, there was a massive debate about scaling. Like, does this thing even have the capacity to handle the bandwidth of transactions without the cost per transaction to be just ungodly and all those things? And that's what brought about this whole SegWit and the Lightning that we now have today, that a person who's entering it just takes for granted that it exists. But back then, I mean, it was kind of like, is this going to be adopted? What's that what's that going to look like when it's implemented? Like, am I going to lose all of my money in this very speculative thing? So it's been this, and I just use the word speculative. And I think back then it was. And I think that that's probably why when you look at my portfolio positioning back then compared to like now, it was way different because those things were very unknown. And I think that so much of that risk has been removed from where we are now, especially with the backdrop we got right now, that it's kind of interesting to have seen it through all those periods of time. And for people that are just coming into it right now, they just don't have an appreciation for all those difficult holding periods and all those risks that had to been talked about and understood at a very high level. So yeah, anyway.
Yeah, and I mean, it's interesting because a lot of those points that you brought up, they're still being brought up today. And a lot of people that want to hate on Bitcoin saying that it's old technology or it's too slow, they'll point to all those facts and they'll have other, cryptocurrencies. Maybe it's a Ripple, maybe it's a Tron or whatever it is, Bitcoin Cash. And they're saying, hey, they could process a lot of these transactions much quicker. But I just don't buy it. Like I've done a lot of the research on those and it just doesn't make sense to me, like the arguments that they make there.
Well, so I have no problem talking about that it can do the transaction at the same speed, it may be lower fees or anything like that. But to make that one-sided argument, you're leaving out the other portions, the other arguments that cancel that out. And for me, like for that one specifically, and it's kind of funny when you see these arguments on Twitter and you just, when you've been in the space for that long, you just kind of smirk and smile at the person, be like, that's a really cute argument. But I remember like aggressively being in a fight about this for 3 months straight back in 2017. So like the fact that you're bringing that up right now is somewhat laughable. But for like the one that you're describing, a person completely neglects the power of a network effect. They don't understand how hard it is in order to bring that many more people into that network of the coin that they're discussing, and how their ability to create that around that coin is good luck. You don't understand marketing, branding, and you don't understand network effects, which you could take an entire PhD course on in order to understand the powers that those things bring. And so, whenever I see those, you just kind of get a smirk on your face and it's not even worth your time to reply to it.
So with that being said, and since you've been in the space for a while now, are there any other cryptocurrencies that you're interested in, or is Bitcoin king for you?
Right now, I haven't seen anything that I think is worthy of my time to focus on. Something that would probably change that is if I saw one of these large platform owners, and the perfect example is Jack Dorsey with Twitter. If one of these large platform owners that have achieved a network effect, like good luck replicating the user base on Twitter, and good luck replicating that community that is trained, because that's what they are. They're trained on how to use Twitter effectively. Like if I go to another platform, now I got to understand how to engage with users. The users aren't even there. The audience isn't even there. Like this goes back to this whole idea of understanding how powerful network effects are. So if somebody's going to create a new token that I think will actually have real utility, and that's what's important. Like people can go out, they can create their own tokens on a whim. I mean, you can go to Fiverr and have somebody build you a decentralized protocol for $5, right? And I can call it Preston coin, but there's no network effect. There's no utility that's going to be swapping into that token or that currency in order for it to actually be used. So what would get me excited is if I saw, Libra was saying that they're going to force users to use that coin for anybody that wants to do advertising on Facebook. Well, all of a sudden that catches my interest. If advertisers have to swap whatever currency they got, whether it's fiat, Bitcoin, you name it, euros, I don't care what it is, they have to swap into Libra in order to conduct advertising on their platform. Well, guess what? I might actually step in and buy some of that because, in my opinion, the utility of that token is going to go up, which means the valuation of the currency, because that's how currencies are valued, is through their utility, through their use, through the number of people that engage in the ownership of it. That's the value of a currency. And I don't see that from any major platform, social platform right now. If that all of a sudden changed, like you saw Jack Dorsey start to come out with Twitter coins or whatever, and forced his advertisers to swap into that token,
Mm-hmm.
and then the people, however they want to distribute that on the other end, if they decentralize Twitter, which is way different, it's way more difficult than people realize to decentralize a social platform. I think it can be done. I just think that it requires so much more engineering and work for that to get to a point where you actually start to see the utility turning out in the coin. So I'm not seeing anything like that. I'm not even seeing anything remotely close to that becoming a reality. So it's not worth my time at this point.
So with that being said, what is Bitcoin's utility in your perspective? There's been this continual debate whether it's been a store of value or if it's an actual currency. Where do you stand on that?
It's nailing central banks to the wall. That's all it's doing. Is it's taking every central bank around the world and it's literally nailing them with their feet off the ground. It's pinning them to the wall is what it's doing. And I think this is really important for people to understand about Bitcoin, is you get the largest amount of transaction for the lowest fee and the highest security. Okay. So the speed, like if let's say I've got $1 billion and I want to step in and conduct a transaction, it's about the clearance of transaction time. Like I want to be able to give that to you, but you have to have some type of assurance that it's cleared. And when you're dealing with, let's say I did that transaction on Litecoin versus Bitcoin. Well, from a statistical standpoint of how many blocks come after that to say, yes, the cost for somebody to step in and try to reverse that transaction is so improbable at this point, we can say that it's cleared. Well, if I'm comparing Bitcoin to any other platform that somebody actually has to perform work to undo, and that's a really key point. Okay, and that's a point that so few understand, because when you're talking about Ripple, is that really decentralized? I don't think I can prove that it is. Does somebody have to do work in order to disprove that transaction? No, they don't. But with Bitcoin, they sure as heck do. Okay, so if you go and you conduct a large-scale transaction, how long does it take to clear? Well, Bitcoin's giving you the fastest clearance of transaction time with the highest level of security for that to happen. So that's why I say it wins. If your goal and your objective for the mission of that protocol is to pin and nail central bankers to the wall, that's the only protocol that does it for me, that has any type of meaningful network effect to it.
So how do you see these central banks responding to this? Because obviously they're not oblivious to what's happening here, and they know that they can't keep printing money forever.
So I'm going to flip this on its head. If I'm a central banker, okay, and I see the social unrest that's happening right now, I'd be a little scared.
Mm-hmm.
I would be a little scared that they're going to come to my building and light it on fire next, right? So what if central bankers, and they never come out and say this publicly, but what if they need this? What if they need this to be successful? Let's flip it on its head. Maybe they actually want this to be successful, but they just can't come out publicly and say that. It's just a different way of looking at it. Mm-hmm. That wouldn't surprise me. I don't know that they necessarily, so few people understand this, first of all, from what I've gathered and all the conversations I've had, and I've had a lot of conversations through the years on this topic. I think a lot of people understand various aspects of it, but I don't think that they understand all the aspects of it. And I'm not saying that I do. But anytime I've gotten an engagement with somebody and started talking about the various aspects, I quickly find that there's a lot of gaps in the way that they're seeing it, mm-hmm. From my vantage point. And I think that's important to emphasize.
So to follow up on that, you've actually been getting into it with Mark Cuban recently on Twitter.
You could say that.
So can you just walk us through, your viewpoint on it, right? Because you came out and you were trying to explain like the different terminology between inflation, deflation, And you made this really great Twitter thread. And then all of a sudden he comes out and he says, hey, you got everything right up until the Bitcoin part. And then all hell broke loose from there.
So in order to understand somebody's opinion, you have to step into their shoes and try to understand it from the lens that they're seeing the world. So if I'm Mark Cuban, I have been an absolute beneficiary of the old system. So right out of the gate, if somebody's saying that there's something wrong with the old system, I probably have a bias to say you're wrong, because from his vantage point, he earned all of that himself, and it had nothing to do with the system itself. And how dare you basically say that the system's broke? He has all of his money in fiat. He has all of his money tied up in assets. So when we look at, and I'm just analyzing Mark's position, right? If we look at his business that he has right now today, he's heavily exposed to a couple different industries. Number one, heavily exposed to NBA basketball, right? They're not playing. Those seats in those stadiums are empty. The licensing for the shirts and all the gear, a significant portion of those revenues go to the NBA through licensing, right? The margins on that licensing is not big for the owners. It's not, because they don't hold the negotiation power in how those deals are set up. Okay. So is he cash flow positive or negative when you're talking about the NBA team? I would argue he's probably cash flow negative in a heavy way. The other thing that he owns a data analytics company that provides information about sporting events. Well, if there's no sporting events happening, you're negative free cash flow, right? He has assets, but it all comes down to your free cash flow. So he's negative on the free cash flows there. Let's go to the next business, the big business that he has, the movie business. He owns the companies that literally show movies. Last time I checked, there isn't anybody going to the movies. Another huge asset sitting on his balance sheet that is negative free cash flow. So if you have this dude who's hitting you up on Twitter and saying that you need to own Bitcoin, and you literally have no free cash flow, he's balance sheet rich, cash flow poor, and I mean very poor. It's chewing through. When you're not making any money on your income statement, guess what it's doing to your balance sheet? It's chewing it up. You're losing equity every quarter. You file your 10Q, your balance sheet is getting smaller. And so if a person needs to take a position in something like this that we're describing, that we think is going to be going to 20,000 by January, 100,000 by the end of next summer, like if you have to buy that and you have no free cash flows to do it, well, that's a little concerning. So I can understand why he might not want to understand it. So when I step into who he is at this point in time, I can understand why it's a little concerning for him to understand it. And so whenever somebody like me saying, well, you got to start talking about, he's saying, well, all the money's going to get polarized into the people who own Bitcoin. Now, talk about the antithesis of what we're experiencing right now due to fiat inflationary monetary policy. It's being all polarized into the hands of a few people. That's why people are rioting around the world, is because of these things. And he has the nerve to say that he thinks that that's going to be what Bitcoin does, right? That's not going to be what Bitcoin does. And I explained to him why. I get into how some of these companies are going to start allocating a portion of their free cash flows. Remember, he doesn't have any right now. They're going to start allocating a portion of their free cash flows into this, and they're going to be sitting on it on their balance sheet, and that's how it's going to get redistributed. And then people who hold significant amounts of Bitcoin are going to offload those whenever they find companies that are using Bitcoin on their balance sheet, and maybe even as a unit of account on their income statement, or as the way that they do business through things like Square. Like, he just doesn't want to hear that stuff, and I understand why he doesn't want to hear that stuff, because it's extremely threatening to his position and where he sits right now. So, he doesn't want to hear any of those comments from me, but unfortunately, I don't run from the truth. And I'm just going to throw it out there in the way that I see it. And you know what, maybe I'm seeing it wrong, but that's, for me, it's just really kind of straightforward. It's just kind of obvious.
Yeah, I mean, you could play devil's advocate and say, hey, I don't know how much money he has free on his balance sheet that he can just take a portion of that and buy some Bitcoin just to hedge against it, just to say, hey, you know what, at least I have some, um, skin in the game. And if these things do play out, I'm still making some money off of it, even though it's eating up like all this negative cash flow that I have coming in right now is still like destroying my balance sheet. But I do get your point there that, everything's working against his favor right now. And in order to protect his businesses, he really needs things to get back to normal as soon as possible. And any type of threat, whether it's Bitcoin or whatever else, he's going to defend against vehemently.
There's no doubt about it. He has marketable securities listed as his current assets on his balance sheet. I have no doubt about it. But now think about how hard it is to offload those marketable securities as the stock market in nominal terms keeps going up.
Mm-hmm.
And it's really important that you emphasize in nominal terms. So I'm just looking at it and I'm saying, yeah, hey man, you're making tons of money in nominal terms.
Mm-hmm.
But I can tell you right now, if we compared, and I'm not trying to say this to brag or anything, but I bet you if we compare returns for the year or the last 2 years, I'm knocking his socks off.
Oh yeah, I love it.
Right.
So with that being said, let's segue over into the stock market right now, because it's kind of acting like the 2017 ICO bubble, where Hertz just went from like 50 cents or whatever it was, and it's up almost 900% over the past month or so. How, in your viewpoint, all this stuff, the party has to end at some point, right? How does this end? Because the Fed is just pumping money into the market and they're just making this thing go up, 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 but that's not sustainable.
Yeah, I think anybody who steps in and says that they understand how the stock market's going to moving forward from a timing standpoint it's a total fool's errand.
Right.
And the reason why, and you alluded to it, was because the Fed stepping in and conducting printing. And I don't think anybody has a real understanding as to how much printing equates to this much movement in the equity market or this much movement in the bond market. And so I just look at it as being, when you go and you look at how the Venezuelan stock market moved in nominal terms in that local domestic currency, it kept going up, but it was a violent whiplash, like N-shaped or capital M-shaped move as it was moving. Same thing as you go to any type of inflationary, hyperinflationary market. I think you're going to see something very similar here in the U.S., pretty much all around the world, as these central bankers continue to add money. I mean, right now you're starting to see all brand new all-time highs after you saw lows that were just the speed of light.
Mm-hmm.
It whipsawed down, it whipsawed back up. If it whipsawed down tomorrow, it wouldn't surprise me at all. If it whipsawed up tomorrow, it wouldn't surprise me at all. But I think the thing that people have to keep in mind is these are all in nominal terms of the fiat that you're measuring it in. If you start stepping out of that and you start looking at it in other things, call it gold, call it Bitcoin, all of a sudden it's not going up anymore. And of all the conversations I have with people outside of the really smart ones that I follow on Twitter, just, dude, nobody understands that because they've never seen it. And it's understandable that they don't get it. It's because they've never seen it in their entire lives.
Mm-hmm. So what advice would you give to people that are, 24-year-olds that are out there that just made a killing by taking some dude's call on Twitter? They say, hey, buy this, it's going to go up. They just declared bankruptcy and, hey, it just happened to jump up and they made some money off it and they think they're a stock market genius now.
Typically, you can't even give people like that advice.
Mm-hmm.
They already know everything.
Yeah.
I would just tell you that if it feels too good to be true, it typically is. You have to understand why it's happening, and is it repeatable, or is this a psychological bias that you have that you think that you are able to do this time and time again? History suggests that you are not able to do that time and time again.
Mm-hmm.
But it's really hard to tell anybody who's doing that and making money in that manner. It's really hard to tell them anything other than be careful.
How often do you remind yourself of Mr. Market?
All the time.
Could you talk? Can you
Yeah,
talk about that a little bit more? Because that's something that I've a huge takeaway from listening to you and, reading The Intelligent Investor and just learning more about Buffett, that whether it's in cryptocurrency and, seeing that crazy boom in 2017 and then seeing the lows in the following years. And now we're starting to see that go back up, whether it's in the crypto market or now in the stock market. That's just something that I'm always cognizant of. And I think that's important for the general person to get a little bit of a sense of.
So Mr. Market's there for you to take advantage of. You're not to be victimized by it. So people look at the volatility in the market and you can look at it one of two ways. You can say, oh my God, this is just bone crushing to me. Or you can say, here's my opportunity. In order to be able to say, here's my opportunity, you have to understand what the value of something is. You got to be able to say, hey, this thing trading for $10 is worth $100. And if you can't do that, if you can't say, I think the value is this for this reason that I'm defining, well, you can never take advantage of Mr. Market, who's coming to your door every single day and offering you a different price. Ben Graham, who was the author of The Intelligent Investor, Warren Buffett's famed, professor, his analogy was that Mr. Market comes to your door every day and he says, do you want to buy stock XYZ from me? I'll sell it to you for $15 today. Then he comes back the next day and he offers you $10. Then the day after that, he comes back, he offers you $20. Every day he's coming back with a different price. You just have to understand what the value of it is opposed to what the price is that he's offering you. So, whenever I look at something like, and I think Bitcoin's a great example because people who are hearing me talk about that are saying, well, how in the world can you possibly value that? Well, I can, and that doesn't mean that it's right, but I'm coming up with a value that I think it's worth. I think the value, like I said, I think around January timeframe, I think it's going to be around $20,000 or maybe even more. I think by the end of the summer of 2021, it's going to be in excess of $100,000. So when the price is hovering close to 10,000 today, that's Mr. Market who's coming to me and offering me that price. Do I buy it? You better darn well believe I buy it because I think it's worth those other things that I stated at that point in the future. So when I look at the yield that gives me based on the time that I would be holding it through those periods of time, and I compare it to everything else as an opportunity cost, well, guess what? I'm buying a lot of that because I think it's going to give me the highest return relative to everything else that's out there. And that's all that you're really doing as an investor. You're looking at all the different options. You're assessing what you think that return is based on a period of time into the future through an internal rate of return calculation. And then you're saying, I should own this proportion of this, and I should own this proportion of that, and make your portfolio with it. And it's really that simple.
So with that being said, how do you go about valuing Bitcoin? Because you can't do fundamental analysis as you would with a company or a stock. Now we're starting to see a lot more models come out like Plan B's Stock to Flow. That's become very popular. And now there's a few other ones that are starting to trickle out as well. But from your perspective, how do you go about thinking of valuing Bitcoin?
I think Plan B's model is 100% valid. That's how I'm valuing it, period. The reason I think it's valid is it gets pretty involved. I think that when you look at Bitcoin specifically, I think that the protocol was designed as a time fuse. I wholeheartedly believe that. And I think whoever this person was that designed it wanted it to be a time fuse so that it had enough time to insert itself into the existing financial rails. If it had an adoption curve that was really fast, I think that it would have never made it. So I think it was designed so that it had this slow, progressive, somewhat violent in the volatility to make it appear like it's extremely speculative time fuse that allowed it to get to a certain threshold, and then it would be globally adopted because there was no way to stop it. So then the question, when a person hears that, they say, well, then how is that achieved? Well, I'm of the opinion that the time fuse is achieved through two major mechanisms inside the protocol. First, it's the 4-year halving, where the stock to flow, which is a measurement that's used in gold markets, it's used in commodity markets. This stock to flow is not something that has never been written about. It has been written about. That doesn't necessarily mean that it's been heavily used throughout the financial community in years past. But I think there's a lot of people that are reassessing the utility of those measurements through stock to flow. So I think when you combine the 4-year halving that happens every 4 years, you get this burst in stock to flow valuation that removes the amount of selling pressure that can exist, because the number of coins that are available, that flow that's being dropped into the market, is literally cut in half. If we were mining gold, it'd be like all the gold miners in the world today, tomorrow when they wake up, they can only mine half as much and put that onto the market. What do you think that's going to do to the price of gold? It's going to make it go up, right? That will happen if gold miners just miraculously could only mine half as much as they did the day before. And that's what you have happening with Bitcoin every 4 years. Now, here's the other thing that makes this possible for this time fuse is the difficulty adjustment, which happens every 2 weeks. So going back to that gold analogy, if we stepped in and we said, all right, tomorrow there's going to be half as much gold mined, what would happen is you would get into this situation where the price wouldn't go up fast enough to protect all of the gold miners in the world that would be mining it at half as much as what they were doing. And because the price wouldn't immediately jump, many of them would go out of business, and they'd get into this death spiral where a significant portion of these miners would go out of business. With Bitcoin, you have this 2-week difficulty adjustment that will step in, assess the speed at which these miners are able to conduct their business model and their hashing that they're doing, and say, all right, this looks like it's a little too hard for you, so let's readjust it. Let's make this easier for you. Okay, so it'd be like, going back to the gold analogy, it'd be like going to these miners that would be struggling immediately because the price wouldn't be realized higher because the flow is half as much. That takes time to set into the market. But it would be like going up to them and saying, it used to take 100 dudes to go out there and mine this gold the day before. But, instead of it taking 100, now it only takes 50 guys to go out there and find half as much gold. Well, when you do that, your expenses on your income statement get cut in half for generic purposes, not accounting for fixed costs in the architecture of the business. But to just use an example, that's what Bitcoin's doing, is it's constantly assessing at a 2-week rate. It's constantly assessing to make sure that these miners can remain profitable, okay, even though the amount that they're mining was cut in half.
And so I think that's the key that a lot of people just forget, is that this 2-week adjustment is happening here, and it keeps moving up and down according to what the hash rate is.
That's right. It's a coordinated thing that is separated in very large, like one is happening every 4 years. The other one is happening every 2 weeks. And for a person who doesn't understand how the protocol functions, they're looking at that and saying, this is just a bunch of, freaking speculators and people who are just bidding it on emotions. And so when you overlay the volatility that comes into these 4 years, when you look at the protocol in 4-year periods of time, you start to see somewhat, in my opinion, very predictable patterns. You start to see how a price can be projected. Like whenever I step out and I say, I think the price is going to be at $20,000 by January of 2021, not even a year from now, I can say that just based on the math that exists, that we know today, based on statistics and Plan B's model and those types of things. And this idea, if correct, that this thing moves in 4-year cycles, that's how I'm coming up with those valuations of why I think it's where it's at. An analogy I like to use is when a person watches the movie Gladiator, the start of the movie, you have your longbow archers there that are laying down these fires. It's from a very far distance. And while they're doing that, the cavalry, the guys on the horses and the swords, are flanking and maneuvering, and the enemy force can't see them going and maneuvering around. They're very fast. They can move quickly, right? They're getting on the flank of the enemy. And those longbows are a distraction. They're from way out, far away. That's your 4-year halving cycle, okay? People don't see it because it only happens every 4 years. But that 2-week difficulty adjustment is that cavalry that then goes in there as the archers and those longbows stop firing for a split second. They sound the horn, and then those cavalry guys go in there and they just start slaying the guys. That's what's happening. It's a coordinated attack between the 4-year halving cycle and the 2-week difficulty adjustment. It is completely synchronized. It is in harmony with each other in order to continue to bid the price. And that's why when you look at it from like Metcalfe's law, and you look at the performance and you zoom out and you look at it from a logarithmic scale of the price since inception over 10 years, you can see it's a perfect plot. Like, this shouldn't surprise anybody that we're getting ready to see another bid after the 4-year halving. So I guess from my vantage point, this is like a really obvious thing. There could be gaps in my thinking. There could be things that I'm missing. I could be completely wrong. But as far as putting down a position based on the probabilities that I'm thinking that I have, it's a no-brainer, especially when you consider the asymmetrical upside to it.
So do you think that the argument that we need large institutions, we need an ETF or something like that, is that valid, or it's irrelevant at this point because no matter what, Bitcoin protocol is going to continue to be executed as it was designed to, and because of the scarcity and the adjustments in the difficulty, that price is going to go up no matter what?
I agree with you. And I think there's a lot of people that would not agree with that statement.
Mm-hmm.
I think a lot of people say, oh, you got to have ETFs. You got to have this. You got to have. I'm not so convinced of that. I think that the price is going to go up no matter whether we've got that or not. And this was a huge point on, I don't know if it was this battle with Mark Cuban or one from a few months back, but that was one of his big things. He was saying, you don't have to convince me to do it. You got to convince my neighbors and everybody else to start using the currency. And I kind of smirked and I thought to myself, you might be wrong about that. And it goes back to this whole idea of the 4-year halving cycle and the 2-week difficulty adjustment, because the thing that people forget is that you have people like myself that have bought this back in 2015 and are deep in the money on it. And they don't have to sell their coins because they got plenty of net worth to not have to go out there and spend it. And here's another thing about the community. A lot of people do not, that have a lot of coins, don't necessarily feel like they have to go out and spend it. Mm-hmm. They might be living in the same house that they've lived in since they've become extremely wealthy. They've got a different time preference than most people. And so what does that do? Well, they're not selling. And when a person says, well, you got to have buyers in the market in order to make the price go up, that's somewhat of a true statement. The other side of that statement is, if you don't have any sellers, it makes the price go up, right? And if you have both, if you got a bunch of buyers and few sellers, it really makes the price go up. So there's a lot of different vantage points to this, and it's something that people really have to challenge, whether they're pumping out a one-sided argument or not. And that goes for me too. I mean, I'm saying these things, but boy, am I open to people that have a different opinion that's backed up by a lot of evidence.
Mm-hmm. Cool. Let's start wrapping up here. You alluded to it a little bit earlier, right? But you're under the thinking that, hey, Bitcoin's going to go up. We just experienced this 4-year halving cycle just executed, right? So according to Plan B stock to flow model, we're supposed to see anywhere between 100 and 250K USD Bitcoin price over the next, let's just call it 3 years or so. You think that Bitcoin's going to hit about 20,000 by January 2021. And a lot of people don't know this, but you kind of made the Mayer multiple. You kind of coined that term. So I think I just looked at it before we started recording. I think it's like 1.2 something, and the average is 2.4. So meaning, in layman's terms, now is a good time to buy. Is that generally the sentiment?
Yeah, and I'm sorry I don't want to correct you.
No, please do.
I've got to correct. The average is around 1.4.
Okay.
And so, yeah, where we're at today, I would just tell you it's just a normal price point in reference to that. I would tell you, I think Plan B's model is way better than the Mayer multiple as far as understanding where you're at in the cycle. I think if I was going to describe a risk for a person who's not participating in this or using Plan B's model, a risk for a person who is looking at that model and saying, well, the model is suggesting that I should be at about a $10,000 price today, and I'm going to wait for the price to be under that. One of the risks that I think exists, especially with the backdrop, the macro backdrop that we have today, is you might have a major player that enters into this. And if they do, they could bid the price quite a bit. And that could be a company. You got companies like Apple that literally have more on their balance sheet in fiat terms than the whole market cap, right, of Bitcoin. And so if they step in and they're like, hey, we're going to allocate $1 billion to this over the next quarter, like, watch out, because the price is going to run if that happens. And I think that the probability of something like that is not as low as maybe some think, let alone a sovereign nation stepping in. Because let's think about it. They're just printing, and they're printing a whole lot. So what's another billion when you're printing trillions for them to have a hedge, right? Like, I think that risk is way higher than people realize. So you can play these games, and whenever I look at people trading it, oh my God, it's like the biggest eye roll ever. Like, I'm thinking to myself, you do not know how to assess risk, asymmetric risk. And if you think you're going to capture, and then you add in the fact that they've got short-term capital gains as a friction to them being right on both sides of their sell and their next buy. I mean, it's the biggest laugh and eye roll I've ever had. Like, I'm just looking at them like, you're so dumb.
I can't imagine doing those taxes. Like trying to keep track of all of that, but then paying 35% or whatever it is on top of that is that's a killer.
It's nuts.
Yeah. So what do you think about when you hear Buffett and Munger come out and they say, hey, Bitcoin is rat poison squared?
For me, it's real easy. They don't understand it.
I understand that. But like, Buffett's always said, hey, I don't go outside of my core competencies. If there's something that I don't know, I don't want to invest in it, and I don't usually talk about it. But then for him to come out and make such a strong statement like that, even though it was a couple of years ago, it just makes me scratch my head a little bit.
I think if I was going back to trying to put myself in their shoes, okay, I think when you grew up through the eras that their brain got conditioned the most, right? That's the first 40 years of their life. Everything after that, there's just small tweaks to the way that the neurons fire in their brain is how I look at them. So they were conditioned that governments create money, period. To think that some unknown decentralized entity could come in and compete with that, to them, is laughable. Here's another vantage point that they have. Let's just say Bitcoin does become successful and everybody in the world's using it, and I own the equity of these businesses. Well, that means these businesses are going to have to start dealing with Bitcoin as a unit of account, and therefore my businesses will then be profitable with that new currency, and I'm not ahead or behind, because they would have looked at stepping out of owning all that equity and taking it straight into Bitcoin as being nuts, right? And for the number of people that own equity in their business, I kind of agree with them. That would be nuts for them to take such a risky position with that many people's lives potentially on the line that are dependent on their ability to properly allocate capital. So from their vantage point, they're looking at it as, well, if I'm wrong, it's not going to be that big of a deal, because eventually these businesses are all going to have to start dealing with Bitcoin as a unit of account, and we're going to make money in Bitcoin then, because the businesses that we have an enduring competitive advantage, and it's not going to really matter. So I think that's how they're looking at this, and it totally makes sense to me whenever I'm in their shoes. Sure, I don't need their validation at all, because I'm comfortable in my ability to conduct my own critical thinking as to what something is or something isn't. So if they come out and say it's rat poison, well, it's rat poison to him. It's not to me. Mm-hmm. But I think those are important considerations for people that want to bash him, which I'm definitely not doing. I'm not bashing Munger. They've got their vantage point. It's way different than my vantage point, where I own 100% of the equity of my business. I don't have shareholders. I can go out and I can allocate that capital as aggressively as I want. And if I lose it all, the only person that I'm really impacting is myself, right? That's just a completely different shoes to be in.
Well, listen, Preston, you've talked about a lot of different topics here, and you've just made me feel way more reassured as far as, my thought process goes, because there's so many competing views on this, but hearing it come from such an intelligent man like yourself is just so reassuring. And just knowing that there's people like you in the market and not just these, avatars on Twitter who are just saying, buy Bitcoin. It shows that there's a bright future for Bitcoin, blockchain technology and stuff like that. So again, I'm really honored for you to come on the show today. But before we leave, what's one thing that you want the listeners to take away?
I'll tell you, the thing that I think is really important for people to take away is question everything I just said. Like, just because I have some arguments to the things that I'm saying, you should question the living hell out of everything that I just said, because that's the only way you're ever gonna be able to buy something with conviction. And, going back to Buffett and Munger, this is something I've gone to many of their shareholder meetings in person. And it's something that they literally bring up every single year, is they talk about this idea of conviction. If you're going back to your Mr. Market and we're coming up with valuations of what we think something is, and the market's coming and it's offering a completely different price, that can really make you feel emotional in a way that makes you want to sell it at the worst and most inopportune time. The only thing that's going to keep you going is if you have conviction in the trade. And the only way you can have conviction in the trade is if you really understand it. So the only way you're going to understand something is if you question everything. And if you say, all right, well, that's that guy's opinion. Well, let me prove him wrong. Let me go find evidence for why he's wrong, right? And then find somebody on Twitter who has the argument that's the opposite of yours and go to battle with them. Why do you think I'm going to battle with Mark Cuban? I'm going to battle with him because if he can shoot holes through my ideas, well, then maybe I'm wrong. But if I slaughter him, and in my very humble opinion, that's exactly what I did, right? I feel like he left with his tail between his legs. If I can do that, well, then it helps me understand the ideas and the foundation of what my justification is. And so I would tell people who are listening to this, if there's one thing to take away from this discussion, it's question everything. Don't buy anything just because you heard a 10-second narrative or a 45-minute dissertation on why something's right. You need to go in there. You need to read the living hell out of it, shoot every single counter opinion down, and then keep shooting them down and trying to figure out ways why you're wrong, because you will not make a lot of money by verifying that you're right. You will make a lot of money in the markets by verifying that you are potentially wrong.
I agree with you 1,000%. Hence why my podcast is called the Do Your Own Research Podcast. Applying that critical thinking and really challenging your own views is so important that people really need to be doing. So again, thank you for coming on. But for the audience, how can they learn more about you and listen to your show?
So I'm really active on Twitter. My name's Preston Pysh, all together on my handle. We have a podcast. It's called We Study Billionaires. We talk about, you name it, billionaire. We probably talked about self-made billionaires. That's a really important part of the description there. We study self-made billionaires. And if you guys want to check it out, we'd love to have you listen to it and join the community.
I'll make sure I link out to everything. But again, thank you so much for taking the time to come on the show. And we'll have to do this again once we're a little further ahead in the bull market.
Tom, really appreciate it.
Thank you.